Hello active traders, this is Ken Calhoun, president of TradeMastery.com and Day Trading University with our breakout charts of the week. With our S&P in decline right now, the market's been selling off today. We've got some especially good charts to look at. As always, all information is for educational use only. I'm not making any advice about what to buy, sell, or hold by watching the screen, not to make actual trades. You may have seen me as a speaker at the MoneyShow events, which I highly recommend. It's great to get out from behind the monitors and rub shoulder with your fellow traders. So if you get an opportunity, be sure to visit the Traders Expos in Las Vegas, New York, and elsewhere. Let's go ahead and jump into our charts of the week. The best of the day trading charts so far that I found was BGNE, Beijing. In my live room, we'd looked at this on the breakout and the retracement. You can see what makes this such a great chart is not only the fact that it uses whole number support and resistance. 60 was the whole number decade value support, did a bear cup and then a big run up. It did an 8-point run today, and I'm recording this live, with resistance right near the 68 whole number. It's now pulled back to around 50% of the trading range and may do a mean reversion bounce or pivot at some point. It may bounce here. I don't know yet. I'm recording this live. Be interesting to see which way it goes. Or down here. A good strategy that you might want to adopt in your own trades is kind of test your chart knowledge and see if you can predict both the long and the short patterns and what's most likely to occur. If it bounces, where's it likely to go from there? Or the path on the short side, if it does sell off, where's it likely to find support and bounce? Kind of map out visually anticipated price direction, and that's a good strategy. But anyway, what makes this such a great chart is the fact that it's got an 8-point trading range on a $60 instrument. This is so much smarter. Even if you're only trading 100 shares, it is infinitely smarter to trade, say, 100 shares of a stock with an 8-point range than 1,000 shares of a $6 stock with an 80-cent range kind of thing. You want charts that have multiple points. It makes it easy to get 50, 80 cents or a buck or two or three out of it on a breakout. So high volume, high volatility charts are really the hallmark of a good professional day trader. These are the type of charts that are sensible and also for swing trading up at new highs. But this is a good example of a perfect chart for day trading with an 8-point trading range for a $60 instrument. It's trading at least 15,000 shares per minute. Now let's take a look at a swing trading chart. In fact, let's take a look at two swing trading charts. The first one I got for you is ACHC. Despite today's sell-off, and if you take a look at the intraday chart, you can see, sure enough, it's selling off, so we don't want to go long yet, but I like the fact that it's in a relatively consistent uptrend in a market. This is our S&P that's been in a downtrend. The S&P's been in a channeling downtrend pattern here. So if we take a look at ACHC, it's got a reasonably strong uptrend despite this. So I'd be looking personally for a long if it's able to take out new highs at some point soon, right? I like the fact that it's got a nice, healthy 5-point trading range. Another quick rider downer, or quick good professional tip. This is a 15-day, 15-minute candlestick chart. I want at least 10% price action range. This is very important that you get this if you're going to swing trade for a living or side income or do it professionally. You want enough point range for the risk reward numbers to make sense. So the point range on this guy is 45 support and 50.6 resistance. So it's just around 5.5 points, which is over 10% on a $50 stock, right? It's got slightly, maybe 12% trading range, 45 to 50.6. So it's enough points of range to make it worth my while as a professional trader if it's able to break resistance. It's likely to kind of chop and drop for now, so not interested yet, but if it does take out new highs, I like the fact that this has had a relatively strong trading channel to the upside this last several weeks. So in a choppy down market, that has good relative strength. Now to play the momentum in the market to the downside, one instrument that I'm currently long in and will scale into is TVIX, TVIX. Okay, TVIX. That's our Velocity Shares Daily Double VIX Short ETN. There's a few different VIX instruments you can trade. I also trade VXX and UVXY. All the same chart pattern, but there's better volatility and price action on TVIX ever since the reverse split earlier. So for that reason, I like this. This goes up when the stock market goes down, and you can see the uptick today, right? We've got a gap continuation, which is my favorite. My world's favorite chart pattern is always going to be gaps that continue in trend. We have that with TVIX. It will continue to climb to new highs if and when the S&P climbs to new lows. It's got an exact inverse relationship, or close to exact. So the fact is this thing has been going up. This guy's been going up. Had the big spike on the big sell-off day back on the 29th. But the main thing to look at is the directional trend of this instrument, and it is decidedly up, despite some bearish upper shadows here. Personally, I'm looking to get long this, continue to get long this if it gets over 24, and then again up over, and not trading recommendations, but at least what I'm going to be doing in my own trades, up over 24 and again over 25.8, because this goes up when the stock market collapses. I'm looking for the mother of all sell-offs this year too. We'll see. It didn't happen last year, but looking to start to establish longer-term swing and directional position trades in the inverse ETFs. And I'll continue to cover those for y'all in our breakout charts of the week. When the stock market does its next run, if it's up or down, the market drops. These are the preferred instruments of choice for capitalizing on markets that sell off, and that's the VIX ETNs like TVIX being the best of the bunch so far. So we'll see if this continues on up to new highs if the market drops. So until next time, wanted to thank all of you for being here. This is Ken Calhoun from TradeMastery.com, wishing you and yours the best for a profitable, successful trading season ahead. Thanks so much. Goodbye.